Hi guys, my name is Chris Weston. I'm head of research here at Pepperstone. I'm delighted to do live trading in this session. We had Blake Morrow earlier from Forex Analytics, so if you have a chance to go back and have a look at that video and you have spare time, obviously do that. But for here and now, we've got Stacey Burke from Stacey Burke Trading. I've known Stacey Burke for a couple of years now. We've done a number of presentations together. He's an absolute gun trader, so we're absolutely privileged to be with him and tap into his mind. And I love his simplistic style, so I think you're going to learn a lot from this. But before we go into Stacey and talk to Stacey a little bit more, if we can just quickly bring up the risk warning. Okay, so everyone just take a couple of moments just to quickly peruse that and have a look at what's going on there. I will say that anything that I say, and more importantly, anything that Stacey says should not be construed as personal advice. If there's any trades that he decides to take real time, they are designed for his logic and his process. And if you believe that they are something that you like, do your own research, but they are not designed as personal trade advice. Obviously, do consider that in your situation there as well. So without further ado, let's bring in the great man himself. Stacey, great to see you again, mate.
You
As I
as
said,
well, Chris.
we've spoken a couple of times. I'm obviously someone who does make things a little bit complicated in trading, combining sort of macro with technical analysis, and that can take a while to get hold of. And what I love about your strategy, which we're going to talk about in a lot more depth here, is how simplistic it is. It's taken you a long time to get to this point. It's refined, which, as I say, we'll talk about. But when people understand this strategy, it's going to resonate a lot with a lot of retail and pro traders as well, in just its simplicity form and using price points to get higher probability outcomes. So really, really great to get you on board. I just want to say to anyone who's watching this, if you do find yourself liking the show, do press the like button. It'd be really great to see. And if you want to subscribe, that's also really appreciated as well. So Stacey, let's crack on. Why don't you tell me a little bit more about you as a trader? We'll talk about your journey in a second, but just tell me a bit about what you do for clients, for education purposes, for Stacey Burke Trading.
First of all, Chris, thanks to yourself and Pepperstone for having me on tonight. It's an absolute honor to be here.
It's our
Hopefully, I
pleasure.
can share some of my experience and whatnot with everybody that's watching. Essentially, I think I've tried everything over the years and learned the hard way. Trying to trade some systems in every market and system jumping, doing all the things that most people end up doing, and essentially finding slowly over time and refining, I suppose, more not so much what retail is doing, but what institutions are doing, and trying to map what the smart money is doing. And again, that's come from learning the hard way, learning from other traders, building on that, and just slowly simplifying things to something that was reproducible week in and week out, based on how the market moved, and also based on my understanding of what was happening in the markets, and also in terms of what my comfort level was as a trader, in terms of what my exposure was, being in on overnight or on the weekends, all those sort of things. And initially starting out end of day, but finding that if you could identify opportunities end of day, why couldn't you narrow that right down on those days, looking for the best opportunity to enter a day that potentially was going to give you an opportunity for asymmetrical risk reward.
Yeah.
So that's pretty much it. And then of course you do that and you end up learning even more lessons when you scale it down, and then you keep figuring out some of the tricks that are happening and the session changes that happen, the stop hunting, etc. And then finding out, I guess, what were the best trade setups. So instead of trying to trade all the time and trade every move, stepping back and letting the better trades set up for the big moves, and then figuring out how to position myself in those when they were ready to explode, so that I wasn't going to be under a lot of heat, and then hopefully scale those up in size.
Well, I love that idea. Let the market come to you. Don't overtrade the account, and patience is an absolute virtue when it comes to trading, right? Is that how you? We'll go to the strategy and you can put it into practice in a minute.
Yeah.
But is that you're a lower frequency trader but the trades come to you, and then when they do, because of it's a higher probability outcome. Is that
That's
in
the
a nutshell?
idea, yeah. I mean, you go through these stages where you think you've figured it out and you trade all the time, and of course you blow your account up
Yeah.
because you trade on the good days and the days that are easy when everybody makes money, and then of course you keep trying to trade, or you trade right into the next session or
Yeah.
something, and you trade even bigger, and of course that's the trade that you're only one trade away from humility.
Mhm.
And again, I've had to learn that the hard way, but that is my modus operandi now, is identifying the best trades. And that took time to really, I suppose, identify my own weaknesses personally to not trade.
Mm.
And so, yeah, that's essentially what it boiled down to. Then again, filtering out, Monday to Friday, how those best trades would set up, even with gold. I mean, it's notorious for a lot of big moves in the US that can wipe you out. So studying that, figuring out how they were clustering volume, all those sorts of things, and then figuring out how I can get best positioned in the trades that we're going to go right away.
So would you say discipline is your primary weapon for getting an edge in your process?
I think it has become that for sure, and that's been hardened through some painful experiences.
Mm.
You can only go through so many of those before ultimately you have to, either quit or figure out how you're going to make it work. And you
Correct.
can
Yeah.
know a lot. You can know a lot about the markets, but if you can't, really control yourself or figure out how you're going to actually be able to perform. Lots of people know a ton about the market, and they know all about trading it and everything else. But when it comes down to being able to do it consistently, that a lot of personal demons have to be beaten down. And it's an ongoing process, because I think, again, you think you go to the screen bulletproof, and you get into a trade, and all of a sudden, as we know, things can change. And so
Yep.
you have to have a lot of checks and balances in place about monitoring your own, emotional capital, I suppose, and being aware of what you're actually doing when you go to the screen, so that, you get underwater right away in a trade. You're not trying to do stuff to get back to the high water mark or get back to break even or whatever
Yep.
that may be. And sometimes the hardest thing to do is just take the loss.
Okay, brilliant. Look, Noel's written in. I love this already. We're getting questions coming through. Fantastic. I want to do it. The best way to do this as we're going along, if you get something that Stacey's saying, feel free to write in questions real time. We'll have a question and answer time at the end, but let's make this quite informal. If there's something that Stacey wants saying and you want to probe it, just write in, and we'll approach those. One question straight away before we get into the strategy. Noel writes, how would you describe your mental state when trading? How do you keep yourself calm? Great question.
Well, I go through this in the 7-step daily routine that I have on the website. It's an audio download. I think you have to work with the end in mind. How do you want to end your day? Do you want to go to bed stressed out, beaten down, emotionally beat up? Or do you want to go to bed, pick out how you feel on your best trading day? Like, I usually get up quite early. I'm up at 4:30. Because I'm in Perth, we have the opportunity to trade all 3 sessions. I don't
Yeah.
always do that, but I typically go through a little routine in the morning, just to sort of get myself sort of in the right state of mind, gratitudes and whatnot. And but I tend to work out. That's the biggest number one thing I think you can do, to just put your body and your mind in a good state of energy. And review your best trade setups and remind yourself. Like,
Bang.
one of the things I do all the time is I go back through, and I have printed off charts where I've blown out accounts. And I know as I talked about the other day, when I was in Adelaide, we had a good chance to talk with some really big traders at the Penfolds Pepperstone event. And some of the guys shared some really big stories about some of the blowouts they had, and just what it did to them emotionally and everything else. And I think that you have to remember what you're trying to do. You're trying to grow your trading business. And so you have to approach it like a business. You have to go there with that in mind. You have to have, the understanding. Like, I'm not going there to trade every move. I'm going there to trade my trading business's best trade setups. So with that in mind, I know how the charts should start to develop over the course of the day. I'm not trying to get into stuff that's going to whipsaw me or chop me up. I'm waiting for the other side of the chart, the people that are printing that chart, the big money. I'm waiting for them to lay out a map that's going to show me that they're preparing to move the market. And so, if you do that, the days that it's easy to trade, you have to step back and go, is this an easy day to trade? Or is this a day where I'm 50-50 and I'm just trying to get into the market?
Cool. Well,
So,
I've got a couple of questions, probably from people who are much higher frequency traders, but a couple of people are writing, John, how much risk are you taking? How much risk are you taking if one trade humbles you? How many times on average you trade a week? So there's a few questions around frequency. So let's answer those as we talk about your strategy now. So let's talk about your price-based strategy. Have you just got one strategy? Have you got multiple strategies? And how would you define, if you take each strategy, which we'll put into practice in a second, are you a trend? Are you momentum? Mean reversion, scalping? What is your strategy there?
well, essentially my target strategy is all based around the highs and the lows, and I start at the daily chart. That typically can start from the beginning of the month. We're either at new highs, new lows, or we're inside. And if we're inside, we could be in a trend. And so essentially I look at the 3-day setup on the Monday, Tuesday, Wednesday. In terms of trading on gold, there's virtually a trade. There can be on a really, Monday, Tuesday, when they're establishing the high and the low of the week, there can be 3 trades: Asia, London, and New York. Today is a great example, and we'll go through that in a second, of where they've consolidated the market over 3 days and they're jamming everybody in, and we're now jammed inside of a 50 pip box, which to me is a great day if you want to try and blow your account out, because that's the days that you get caught in chop and it whips back and forth. It doesn't go anywhere and you're sitting there for hours. So most of my trades are based around the opens of the sessions when they're at the highs and the lows, and typically when they've done sort of 3 legs of movement or waves of consolidating volume, because now we've got fuel for a fast explosive move. So I like to be in a trade that's going to be over maybe in 15 to 45 minutes. And sometimes if it's high or low of the week, and it can come down really fast and then creep the rest of the entire day. So you might be in that all day. You're in profit for the bulk of that entire move.
So you're looking for a 3-way setup at an open, and looking to then fade that strength with inside the bar, with inside the top of the range.
Yeah, not so much fade it, because usually when it's clustered, it's setting up for an explosive move. So it'll establish a higher or low and then go into consolidation. That we'll go through some examples.
Yeah.
That consolidation is building up for an explosive move, and typically it's back into a trade that's already in profit. So, one of my favorite sayings is nobody gets a free lunch. And if you've been trading long enough, people talk about day trading is risky and all that. Well, if you're trading end of day, if it was as simple as just buying breakouts, then everybody would just be buying breakouts or selling breakouts and they'd be in the money. And we know that it doesn't work that way. Every time frame that typically gets triggered into the market usually ends up getting some heat put back into it. So, when I look at the market, I'm looking at 4-hour daily entries that are broken on that, 15 5-minute level, which triggers other time frame traders into the market. And when they have, they might even get up 25 pips, but then you'll start to see around round numbers, quarter levels, where they'll consolidate in the gap time heading into the next session. And that next session, whether it's the equity open or the hour prior, whatever, the hour after, you'll see a reversal, which is going back into the money, 25, 50, maybe more if it's higher low of the week.
Yeah. And you talk about this with gold, but do you approach different asset classes, different instruments in a different way then? Can you apply that? Do you apply that same logic across asset classes?
Yeah, absolutely. I mean, I mainly focus on gold. I follow the majors. I really rarely take trades in the majors unless it's a 3-day setup or a Friday reversal. Sometimes, excuse me, there's a really good New York reversal. But Bitcoin, S&P, all the other instruments, typically everything has a high and a low. It has round numbers, and everything tends to move when the major regional markets are open. So again, you talk about money flow. I when the market's open, the money's flowing either to trap people in the wrong direction or to continue a trend day or whatever that may be.
Yeah, good stuff. We've got some questions, but what's the most important signal for you to trade?
Most important signal. Oh, that's a good question. Well, again, high and low of the day. Like yesterday on the pound, we saw, and the euro, we saw a great Asia, London, New York, where they went 1 session, 2 sessions, 3 sessions lower, a creeping trend down inside of Monday's range, and then a double bottom or triple bottom on the pound, double bottom on the euro. Gold last Friday was a textbook entry. They went up and put a high in place in the London session. They went up 3 levels of rise, went sideways, and then engulfed the high as they headed into the U.S.
Should we bring up the chart? Should we do you want to have a look at it?
Yeah,
Do you want to show us what you mean?
Yeah. Okay, we'll go back to gold here. So if we go, go back to gold last Friday. So last Friday, we see that, okay, of course, we've had a major run down on gold. If we took a look at the daily chart, let's bring that up here. Obviously, gold's had a big blow off over the last week. Last Friday, they opened up inside and then took out the lower high from the U.S. session close. Continued up. So again, I talk about 3 levels. Some days it might be 25, 25, and 25. In this particular instance, we had 100 pip boxes. So they went up 100 from the low of Friday's U.S. session, and you'll notice.
Sorry, I'm just going to. The boxes represent the different time zones.
Yeah, sorry, Chris. Blue is Asia.
Yeah.
Pink is the Europe-London window, and then yellow, if you can see that on there, is the U.S. session. Can you see the yellow?
How did you get that indicator onto your MetaTrader platform?
That's just an iSessions. It's a free download. It's just Google iSessions, and you'll be able to download and put it in there. Yeah. And I just set the times for the 3-hour window, the equity hour in the middle hour. This is based on. I know people always ask me, what about the time change and everything else? This is all based on New York time, and to me, year round, this is consistent. So they went inside on Friday morning, and then they brought it up into the next 00 box, continued that into the London session, and went up into the third 00 box. And this bar in the gap time is the key. They pinned up into the short traders before engulfing it, and then went sideways. Another engulfment, right heading into the U.S. 3-hour window, the hour prior to the equity markets, and the explosive move down. And again, I just talk about this as they're going higher, they're bringing people up higher in the market. So every time a session opens, you're buying higher during the day. And people can call this a trend, and it's great if you're done and you take money off the table. But if you're sitting in this market, or you try to counter trend this move, this is where people get smashed, because they're not going to come back. The reason they're not coming back, and you'll notice that this first 15-minute bar completely engulfs the entire Asia-London session, because these people, if they're not doing anything, are sitting there deciding what they should do. If they haven't taken money off the table, should I get out? Should I cut the trade? Is this just noise? Should I give it some wiggle room? And of course, it just falls through. And then the equity session opens, and they pull back into traders that are lower level shorts. And you'll notice it pins into the 00s before fading away and closing into the end of the session. I heard somebody told me
that period that you've got where you start making from 9:30, it just trades really. I mean, it's respecting levels, it's making the higher lows, and then it comes back to the retest. So it just looks. I mean, maybe 15 minutes is the right time frame, but it just looks for your free wave. It's the 15-minute, or have you just through the time of refining it? It's a 15-minute chart, the best one that you see for this?
I use the 15-minute to establish the levels and to see the general pattern. Like when we get into this scenario, I'm looking for the entry on the 1 minute and the 5 minute.
Yep.
as
Right.
we head into this. So as this is rolling over, I'm ideally looking to get filled somewhere in that 25 area, the quarter level.
Yeah.
So that once it accelerates away, I'm already at break even, or perhaps adding another position in and moving the first lot to break even, that sort of thing, to keep my risk consistent.
Yeah. Right.
My risk would be the maximum of this one bar. So typically, you're looking at a quarter as a maximum stop, and ideally on the shorter time frame, you would see a similar pattern. So maybe 12 to 15 pips if you're down to the 5 or the 1 minute chart.
Yeah. Okay. So it's like so your risk, and that's going to be a function of volatility. So obviously, the larger the bars, the more risk you're taking on. So would that then determine your position size? If you're going into a trade and you're taking 15 pips of risk, how does that determine the position size that you're going to trade on that?
So on a chart like this is a really clean, well-defined best trade setup sort of scenario. I would be prepared to put more risk on a trade percentage-wise. So, and we'll look at. Can I slide over to today for a second?
Please do. Yeah.
Yeah. So if we take a look at today's chart and we just crunch this up a little bit and we take a look, we can see last Friday peak formation high, peak formation low. It's a 200 pip box. They've locked in the low Friday night, and then they've stayed inside of a 200 pip box for the bulk of this Monday, Tuesday, Wednesday. But you'll notice as Monday was an inside bar, they took out the high, so they've triggered longs on the inside bar potentially, and they're currently underwater. Right. But as we've progressed through the week, you'll notice that the range has tightened up inside of a 100 pip box now, and then today we're inside of a virtually 50 and now maybe 75 pip box. So that to me is a low probability situation, meaning that I'm prepared to wait to see if something would change going into New York. I could see them blowing this off to as we've gone through Monday, Tuesday, you'll notice that the fills on the longs have moved up. They're higher up now. We're above double zeros. So we've got a bulk of the volume moving up in that upper half of the 200 pip box, which means that if they were to roll one over, they could easily hit all the stops and retest the low one more time.
Right. Okay. Yeah.
So I would wait for this. And this, if I was to do anything today, which earlier in Asia, I was in just a smaller move, I'll put a very small percentage of risk on that trade because I know that the likelihood of me getting much out of this more than 25 to 50 pips because we're trading into a peak formation, as opposed to this market now coiling and getting ready for an explosive move, which if it does start to break and pull back for a continuation, that may be a trade that accelerates now into a 1 or 2 day move.
Yeah. I just want a couple of questions. The indicator, Eric, is the I signal indicator.
I sessions.
Sorry. So you can download that onto your MT4. I suspect MT5 as well. The blue lines are just the horizontal drawing lines that you've put on there. Talk to me about the characteristics of the sessions, because we do find a lot of clients trade that rollover period between European into UK trading sessions. So we tend to see instinctively we tend to see lower trading range coming through Asia, and then that tends to explode a little bit more as we go into the UK and US. I put a lot of that down in the US down to the fact that a lot of the trading desks in London are up, but also you get a lot of the tier 1 data that tends to move things. US data, payrolls, manufacturing, Fed speakers, blah blah blah, and that's why we do tend to see that higher range expansion playing through. Is that then when you tend to get the third leg up into that situation?
Yeah, typically Monday, Tuesday, Monday opened up inside. So what I like to see is if they've taken out a weekly high or low or a previous day high or low. So on a Monday, Tuesday, if they've triggered a weekly high, obviously they've triggered the previous day's high or low. And now you've got other time frame traders in the market, which means you have bigger players possibly entering into the market. And that's, again, depending on the how the price action is engineered. If it's a really clean chart, like, you notice today and yesterday, it's really jamming and wicking inside of a 50 pip range.
Yeah.
As opposed to having nice clean swings 50 to 75 pips apart where they're establishing well-defined highs and lows. Yeah. Now you're getting some clean geometry. So those 3 legs, like even Monday, you can see Monday 1 push up, 2 pushes up, and then the third push continues into the peak formation at the high of the week on Tuesday morning. They come right back down and hit the stops, pull it back, hit the stops on the lower, the second most in London, and then they hit the low of the day and the U.S. session lows as the U.S. 3-hour window opens. So sometimes, again, as much as we want to try and catch the move out, which, when it looks clean after the fact, but when you're sitting in here, you can get chopped up sometimes, and it's better just let the market set a high, set a low, and then establish your thesis, or have a thesis in terms of the geometry as it's setting up for a bigger range. Because as it expands, now your risk reward can potentially be increasing as well. Okay,
so where we are right now, as you say, there's a bit of chop. It's not it's quite messy. There's not the clean swings that you saw back where your cursor is right now. But would you be doing something here? Obviously you're not going to trade now because we haven't had the 3-bar swing. But what levels would you be looking at for here?
Right now, we're seeing Europe and London is trading inside of a peak formation from yesterday's bar. So we can see there's possibly an engulfment happening here, and this is the second leg up from the Europe window. So this could essentially be a nice trap getting people in, and we're sort of in the gap time now. Now, if this was to break down, we could this could fall right through, but this could come down to double zeros. What I would like to see is this come down and maybe pull back into 50 and then roll over in the US. We'll have a middle structure then for a higher sort of M formation, putting in a lower low inside somewhere here. Maybe they'll hit the stops on the traders that are chasing this first leg down. And now we've got 3 pushes up, and we've got a middle structure that if they clear that, we'll have a smaller pattern within a pattern for maybe a measured move down to 50, or even take out the lows of yesterday's bar. Remember, we've got inside bar traders that are long right now. Their stops will definitely be at the low of yesterday on Monday. So they've got stops sitting down here. And if this is to break down and pull back and roll over, gold can just retrade down. It's like there's nothing there. Sometimes it'll hang there, and then boom, it'll drop 50 pips.
Okay, so we're looking to see if those stops get wiped out, then a little bit of strength, and then price to roll over, and that will be where you're looking to get short on this strategy. Talk to me. We've got the sorry, go on.
I was just going to say what I'm particularly keen on looking for today is this to drop down and pull back and be rolling over as we're into the US 3-hour window. That to me is an ideal setup. Typically, if you go back and just have a look through the US sessions, it makes a lot of its bigger moves in the US window. And again, just establishing Asia, London, you can get, if we were at the higher low of the week, that's a little bit different, but we're jammed inside right now. And there's a lot of volume clustered inside here, and they could easily just boom, take this out. No problem at all.
Yeah, good stuff. Talk to me about taking profits. So you've identified where your stop is. Now, let's say you get the setup on this, and hopefully we'll go through some other charts and see if we can identify some trades using this system now. But I'm interested in where you go for your profit target. Let's say you've got a 15 point or 15 pip stop loss on the trade. Is it a set target, or is it just when price tells you to get out?
So on the majors, usually you might even be able to get tighter on the majors. The volatility is obviously less than gold, depending on how that's set up. So if we take a look at the pound, maybe. So the pound, we see the break occurred at the bottom at the end of the Asian session. They went sideways at the low of the day. This is a third day up. They've gone up and locked in the high. Again, this could be a trap. We could see a retest. There's stops sitting up where the green bar is. If there was a sell setup somewhere up top, that would be I'd be looking at a minimum, probably at 50 pips, because they'll come back and get this guy right here. Normally the majors, I think a good day is 25, but if it's the low of the week, or like yesterday was an ideal setup, there was 50 pips on the pound. They came down, they made a low, they came back inside of that low in the US session, locked it in at double zeros once the equity markets opened, and then boom, straight up 50 pips. Monday, same sort of scenario. It was a trending day, but you'll notice they came down on Friday. They worked the low. They jammed traders in down low, smaller pattern within a pattern, a 3-push pattern. There's an example of a first bar trade. But again, the equity markets comes back into the guy to get him a break even, and then boom, it takes off, and there's a 100 pip day. So for me, I like to go for 50 pips, but on a setup where there's compression, I'll try to split that position into two sizes and leave the second one in to trail it.
So risking 15 to make 50, that seems like a decent risk reward in that trade. So you can, if you've got a high probability and you don't that risk reward, then it seems like a fairly successful business model.
Yeah, gold is 50 pips on gold is, I learned the hard way. You have to lock in profits. Yeah, I pre-program my profit targets. One of the things with gold though is that if you're getting in on a really smaller time frame, the 15-minute entry may give you 50. So what I've learned on gold is that I'll often maybe take that first position for 75. And if it's like last Friday, it's the end of the week, we've got, that was over 150 pips from high to low, and they're going to go and hit the low, or they've got that set up for an explosive move. I'll leave the second one in and I'll just follow it as long as I can.
Sweet. Question from G Lee. I think this is going to resonate with a lot of people, to be honest. Sorry, let's just 2 seconds. It's interesting. It's a question about market makers, and there's this question more about the stop loss side of things. You mentioned about the stop trades that go through the market. Now, obviously, that's not market makers. That's the broader market, the investment banks and the flow desks, effectively, who do that. When you're trading these prices, effectively they come from a bunch of investment banks and liquidity providers, so they're obviously providing the pricing. When you talk about the stops coming out the market and people looking to take out the stops, how do you see that happening? I mean, do you think that there is a conspiracy theory out there? Do you see?
No, I don't think it's a conspiracy theory. I think it's the nature of how markets work. Like if you we can look at a 1 minute chart, and people have the wrong idea about time frames. It's about price level, high and low, because where do retail traders put all their stops? They put them at the high or the low. But you'll notice even on a 1 minute chart, like people talk about, I want to align my 4 hour, my 1 hour, my 15 minute, my 5 minute, my 1 minute all up. Well, it doesn't work that way. The high of the 1 minute chart is the same as the high of the 4 hour chart. And so when somebody sells it up here, we know that they're putting stops in up top somewhere. And when somebody's bought they've bought down in the low of the day on a 1 hour chart or a 4 hour chart or a 15 minute chart, we know there are stops down here. So, people can call it liquidity, whatever. I don't know. Do I think that there's a conspiracy? No, but I think that there's a business model in place, and they're not there to, when I say they, the institutions are there to make money. You make money by transferring it from one account to another. And so, retail, look, there's two reasons I think why the bulk of retail traders lose money. And I know firsthand because I've learned the hard way. It's trying to trade all the time and trade all the moves and trading inside. So you'll notice I have highs and lows here. Well, this stuff is all inside. So yes, there are moves here, but again, I'm not worried about getting in here and selling up here. I'm looking for the trades that when they go all the way down and there's no heat. I don't want to be in a creeping sideways movement. And this is where you have to understand. Sorry, I'll move this chart up again. You have to understand what's happening here. They're building this chart. They're building order flow. They're building this up, and then bang, they're taking it out. I want to trade from here to here. This stuff, sure, you could be in this, and this could be a trending trade. This is a good trade. So make sure you take money off the table, because there's another, Thursday, creeping trend down. This was a market that just was all in. It was an all-in day. That's a little different. So there are different types of days. There are different types of patterns. But I think that, there's a business there, and I'm trying to think like them. Where's the money? Who's in profit? Is this geometry setting up as a stop hunt type of scenario, or is this a trending day? Is this a low probability day? So this is, day 1, day 2, day 3. We're inside. It's choppy. To me right now, until this changes, this is a low probability setup for me.
Cool. this is, I mean, this is great color. This is a process that you've spent a long time refining. I think there's probably a lot of people out there sitting there going, you know, I'd love to really put a bit of time into understanding this. There's only so much you can learn in 45 minutes, right? So there's a lot of this stuff on your YouTube channel that people can find if they want a much deeper understanding about this strategy.
Absolutely. Yeah. I mean, you know, again, it's all there. My number one thing would be just to study the highs and lows and the timing. Timing is so critical. It's you can be in the right direction and have the wrong timing and get smashed.
So I just got to turn the lights on. They're just about to go. Just bear with me a sec. Okay, right. Let's go to another pair, and we talked about that move through the lows and the highs, and we spoke earlier with Blake about what was going on Bitcoin. I want to bring up dollar yen. If you could bring up dollar yen, because that's a really interesting. And if we could start with the daily, because we've seen today the breakthrough. Well, we've seen a higher high coming through.
Yep.
From this, but we're testing that April high. So this is a really good one. So we're really right up there now. I mean, we're talking about whether is this going to. We've actually got. How would you trade this now, based on the fact that we've got this potential breakout pattern coming through? I know a lot of conjecture about how new traders would trade this and how pro traders would trade a breakout here. I know your system works on 15 minutes, but how does this take into account, given you've got this major high coming through? We're nearly there now. How does your system account for this, right? Is there any setups or trades on the back of that now?
Well, everything starts end of day for me. So I like to look at the month in terms of how the month rolls over. So every month, you know, again, it's the same sort of scenario, new high, new low. If we're inside, we're inside. And we can see that when June opened up, we were inside, they've made a low back in April. They've come down. I talked about this earlier, 1, 2, 3 down, and then pulled it back, and they jammed inside the low and continued that squeeze upwards. I would look for something similar to what we see at the beginning of April. If this was to break out, I still believe that we would see some sort of, it could even be a 1-bar pullback. If it was an explosive breakout and we had, you know, for example, if we look back to February, March,
yep,
this 1-bar breakout, that pin hammer is an ideal opportunity for an entry to be long on a 1-bar stop. So the same principles apply that I would, you know, I look at the daily for the days where there's an opportunity. And when we get into the end of the month, you know, if we go back and look at every monthly rollover, there's a new time cycle starting. They could go up 1, 2, 3, and then boom, the downward move continues. They drag people down, and then boom, they hit the stops, and then they keep going down again. So I would look for something similar to this, or a 1, 2, 3 back into that breakout, and then a continuation. And we have, ideally, if this was to be a legitimate breakout, we could have a measured move on a chart like this for a full expansion somewhere, maybe up to that 114.40 area. Right. Now, again, not suggesting that that's a trade, but the other scenario is that it works the high at the beginning of the month, and we could get a 3-peak pattern, and it rolls over. These higher lows, this creeping trend going up, could also become fuel for a fast move down, as we saw in the pound and gold. But this ideally looks like it could squeeze, pop out, maybe have a 1, 2, 3, and continue that long trade up. 1, 2, 3, when I say that, is like a 3-day pattern against the trend.
Yeah, I really like dollar yen. I mean, it's a grinding currency. We don't tend to see that explosive, impulsive move that you might do in, say, Aussie yen or Mex yen, for example. But you know, you've got a somewhat positive correlation to equity markets. If they continue to push higher, then dollar yen will break through those highs. But then also you get the broad dollar flow. If we're going through this period in late June into September, when we're starting talking about, you know, when taper is going to happen from the Fed, when, you know, when rates are going up, what's happening with real yields and all the fundamental stuff that I look at, the dollar looks quite nice from that perspective. So you get a higher equity market's generally synonymous with a weaker dollar. But I think in this instance, you're getting a higher equities positive for dollar yen, but also then you get the dollar kicker if that goes through. So I like it fundamentally. I think dollar yen looks really good from a fundamental perspective, and I think if it breaks through there, that could be very powerful indeed. All right, yeah, 114 could be a good level to do. But I think fundamentally, I really like the dollar against the yen, especially against the funding currencies in that situation. So. Yeah, what are you seeing on the 15-minute there? Anything? So you're talking about waiting to the end of the month there.
Well, no, I see obviously we're in a strong up move, but if we go to the 15-minute, and I'll just bring this chart up, I'll put the other template on there. The yen is a great example of a pair. So if you asked earlier about profit targets, this would be a 25 pip sort of currency pair, because you're not going to get 150 pip day unless you're trading this based on that end of day movement. So if we come back and look at that 3-day cycle again, I'll just put this pink line on for people to see for Monday. This was a great example of Monday consolidating inside and then a vertical move, a fast vertical move, taking out the low of last week and then pulling back and giving a peak formation and starting that 3-day cycle. So we've got a peak formation low. This is a great example of where in the gap time they've come outside. They've taken out the lows of the week. We've triggered other time frame traders. So there'd be people who shorted this market, whether they've shorted the end of day and low of the week, whatever that may be.
Yeah.
Their stop typically would be above, of course, the high of Friday.
Yep.
And the market's come back inside. There's an example of traders, the 3-bar sort of stop hunt back against the trend. So even though this is grinding its way up into the Europe window, we get a stop hunt down and they continue the move with a spring at double zeros, and the market continues up. When we break the double zeros, we got highs above 25. I'm thinking 00 to 50 as a profit target sort of scenario for this pair. Yeah. Now, this is a situation where lining that up with the daily, you might be more inclined to hold on to that because you've just now bought the low of a weekly breakout and they've put a peak formation in. This may obviously go back to the high of the previous week, which in fact it ended up doing. And now, of course, talking about measured moves, what you were saying, what this could do, we could possibly have a measured move happening on this next few weeks, somewhere maybe up to 111.80.
So you're predominantly price-based, but you will use Fibonacci and projections and other indicators as well, just to get that target, that expected target based on the projections.
That's not a Fibonacci. That's just 100% expansions of the range.
Oh, just expansion, right? Yeah.
So that's just a measured range of 100% of that high low.
Okay. What are you? Let's go to a currency close to my heart. Let's go to cable. Because we've got the Bank of England tomorrow. We're not expecting anything major there, but it'd be interesting to see how price behaviour is going into that central bank, given that the Fed have obviously taken a step forward to normalisation. That's allowed other central banks a bit more wriggle room, effectively, to be a bit more hawkish. Not seeing too much in the way of building expectations, but what are you seeing in the behaviour of the pound? Are there any trades here that you like the look of?
Yeah, this is really interesting, and this is a great example of a rounding top. Beautiful pattern on the daily. And again, you'll notice the timing of that. So they're working it up into 3 peaks into the end of the month.
Yep.
And they engulf it, the last little high bull right at the end of the month. First bar trade on a daily chart.
So you're talking about the engulfing candle? That's
right. And we got a bear pin. It takes out the high of the month. So again, you've triggered the high of the month. And that obviously would trigger other time frame traders, daily, weekly, monthly. Now you've got 3 time frames. This is a powerful setup. And then it's gone sideways and rolled over. So there's your pattern within a pattern. You've got a rectangle up top. Peter Brandt talks about this.
Yep.
What I like about this is they've pulled this up Monday, Tuesday, Wednesday, 1, 2, 3 to Friday's high. We've got a little narrow range bar possibly forming.
Yep.
We could see, and you'll notice if you went long on the reversal here, if people are long, you notice how they're getting filled a long ways off the low.
Yep.
So they're being forced to chase the price as opposed to buying low at the low of a trading range. When you see this sort of scenario, like they could have a 1-bar continuation down, which could catch traders short then as well. We could end up getting pushes into the low without taking out the low. So they get caught shorting that, and then a reversal for a pullback up inside of that range. or this market engulfs. We could get an engulfment on that news tomorrow, and this market could roll over to either retest the lows or even possibly continue down lower. We got stops sitting down below the lows of March and April.
Yeah.
So this 1, 2, 3, this is a great example. Possibly, I mean, obviously the day's not finished trading, but this is a great example of a 1, 2, 3 against the strong move down. Like I wouldn't want to be long right now. I just wouldn't feel like there's a whole, you're going into a falling knife, even though they've come back 1, 2, 3. This is the 3-day cycle possibly setting up. We could get a bear pin, which triggers shorts but pulls back inside. And then the next day, Friday, we could see Friday roll back over and test the lows.
Okay. So
I mean, I don't know until that happens, but that's what I'd be looking for right now. And if we go to the 15-minute, which we had up earlier, we had a micro trend line break and then a pullback into the quarter level. So again, this creeping trend down, that's sort of what I don't want to be in. You could short this, and this could still, be 25, 30 pips down. But that creep to me is, again, you'll notice every time you short this, you're getting filled lower and lower, which to me is a red flag for them. They could easily come back up one more time in the gap or in the US Open, hit the highs. So every fill is getting filled worse. They come back and tap the high, maybe hit the stops from a few weeks ago, which we can go back and look, or it could fall down and roll over. But again, if that's the case, I think there'll be a great trade tomorrow. So this sort of creeping stuff is you could be short, but you're in this trade for 2 hours maybe, and you're still only up maybe 15 to 20 pips.
Yeah.
So I still think that this will come back up, and you'll notice one bar could easily trap all these shorts. So the lower you get filled, one bar engulfs all of that, and you're underwater.
So how do you feel about, you say that you trade at the end of the day, that dictates your situation because all the news is out. If you've got a position though, and it's open, and you've got something like a central bank meeting which poses a risk event to your trade, how do you deal with that? So obviously you're looking at the calendar, you're looking at event risk, you're making an assessment. Could this be an event risk? Does this assess? Are you just purely dictated to by price, or do you say, do you know what, this is a big, it could be a big vol event, and maybe I'll take a bit off the table? Are you dictated by news at all?
Yeah, I very rarely would ever trade prior to the news. But that said, I could be in a trade, like if it was BOE or something, you could be in a trade prior to that news. You could be in that 2 hours or an hour before that. And the news could effectively be one of two things. You could already be up and it's already hit your profit target, or that news could be the catalyst for the capitulation to complete the move. Now, the other scenario is that if you're in front of that news, I think that's high risk. I don't ever do that. If it was payrolls, for example, you might get Asia, London, New York setting up at the low of the day or the high of the day for an explosive move. But I would wait for that first 5-minute bar to finish trading, because that again could be a first bar entry heading into the equities hour, that sort of scenario. Yeah. If it takes off without me, like there's enough good trades. You don't need to gamble. So that said, like when I was saying about end of day, what I meant by that, Chris, is that everything starts on the end of day charts for me. So I'm looking at the overall movement. Are we in an up month for gold, for example? If we go back and look at that, the whole week, why would you want to try and go long against a move like this? Like obviously there's moves up in Asia and everything else. So in terms of percentage risk, if I'm going long on a good clean setup, but I know I'm against the overall trend, that's going to be a low percentage of risk, and I'm going to be taking money off the table, and I'm going to be watching it super tight. But when I'm back in line with that huge move down like that, I'd be prepared to take more risk on that trade, because there's a lot of gravity going in the direction of that trade.
Yeah, nice. Sterling Aussie, we've got an unnamed person wants you to have a quick look at sterling against the Aussie.
Put the daily up here. Yep.
Obviously, again, another pair that's pushed up to those high levels there. Has it got a three-leg move there? Is there any cells on that you're just looking for on that at all? Or
this is a sort of like on a daily chart. I don't like this. You'll notice like it's a lot of highs and lows, back and forth, back and forth, back and forth. When we look at the pound, if we scrunch that back up, the last few months has been a lot cleaner, like just clean movement of highs and lows. In terms of the pairs, I don't marry myself to any one particular instrument. Now people would say, yeah, but I mainly trade gold. And the reason why I trade gold is that on any given day, it's usually clean, well-defined charts. So the pound Aussie, I think, again, coming back to that 3-day cycle, if we go back and just look at the 3-day cycle, this is where I would tend to be looking more is over the 3 sessions. Does it, like, this is obviously there was an opportunity there today. They took that market up 50 pips, and then we get a bear pin hammer after they've gone up inside of the high of the week. That's great. That's the sort of scenario that you want to be looking for, where people are forced to chase the trade higher, and then at the end there's a 1, 2, 3, and you'll notice that bear pin hammer is the very last candle of the middle hour. So as we head into the next hour, boom.
So that's had a big move. It's consolidating at those lows. If
50 pips.
If you'd caught that move though, let's say hypothetically you were short this pair, you've got your 50 pips, but it's consolidating at those previous lows. What would you do now? You'd be out?
I'd be out with 50
half
pips.
and just.
Well, they've gone to the low. They've gone to the low of the day, and you'll notice they're sitting on the low. This could fall through, but my whole thing, Chris, is I don't care if it's 25 pips. If it's a scalable trade setup it's set up for an explosive move, I would rather trade for 25 pips on a high probability setup for an explosive move that I could put size on. Yeah. And be done and not have any heat. Like this trade had 0 heat on it. So you've got your high bull, you got your bear pin hammer. It's the last candle of the hour. And you've got the stop hunt. This is a stop hunt. Anytime it goes vertical like that, that's a stop hunt, which means you're either going to get a creeper down or it's going to go the same thing back. So in terms of taking profits, I don't have any fantasies about getting 150 pips on every trade. I lock in 50 minimum on gold. And again, if it got down to 25 and was consolidating and it was there for longer than 2 bars, I'd be taking the money off the table, because it can come back in 1 bar and you're up 50 or 40 pips and all of a sudden you're up 15.
Super. Richard's written, I don't know if you've noticed this at all, Stacey, given that you've obviously been using this for a while, but Richard writes, I've noticed on the iSessions start at different times on different charts. Dollar yen in Asia starts 1 hour later than gold, for example. Have you noticed that? And if you have, is there a reason for that?
I set the times on mine. Mine are all the same. So you can set the times yourself. Like right. That's an indicator. Mine are preset. It's the same on every chart. Yeah. Just coming back to the pound Aussie. So just going back to that 3-day Monday, Tuesday, Wednesday, high low of the week. This ideally may be giving us a nice setup heading into tomorrow's meeting minutes for a rollover to retest the lows. So we've put in a peak formation. Yesterday, obviously chop day, they worked back into the high. They've come down into consolidation, stop hunted into traders that were short, first mouse. They've come back down. This could fall through or roll over. Yeah. But this may ideally be setting up for something tomorrow, just on that, to possibly retest that low. Now, again, I'm not giving advice. I'm just saying this is an ideal sort of scenario where they've been working the high, and we have a catalyst possibly tomorrow with fundamental news where they could easily come back and test that. Now, I'll just go back out, take a look at the daily again. So, yeah, I mean, you'll notice here they've gone up, they've hit the high. So you're counter trending the overall move of the month. But the other scenario is that we are getting towards the end of this month. They've taken out the highs of the month, and if this engulfs, we could see this retest up into this bear candle and maybe roll over to retest this bullpen. Somebody's gone long on this bullpen.
Yeah.
And obviously they got to stop. There's money underneath. And we're up top. We're up high.
Yep.
So if I was to sell this with a sell, no, I'm not saying to sell this now, but if we were to sell this on a market that was rolling over, you're selling up at the high. In fact, the high of the year. And they've gone up to the high of pretty much, I believe, not quite the high of last year, but obviously the high of the last 6 months. So,
wow, that's a big level, isn't it? So definitely one to watch. I got Aussie Kiwi, and then I just would touch on Bitcoin as well, because we've obviously had a lot of interest in the crypto space recently. So obviously there's been a big defense of those range lows. Let's have a quick look at the Aussie Kiwi, because got a couple of people asking about that.
daily up here. Actually, sorry, put a blank chart up. So for me, when I look at a chart like this and you see a lot of the gaps, there's gaps everywhere between the bars. That to me, I mean, intraday, yes, maybe that would be an opportunity, but these sort of charts to me aren't the best for my sort of trading.
Yep. Okay.
Because you've got lots of wicks, lots of gaps. That to me means there's probably either thin volume or there's bigger players that are controlling that market that makes it harder to trade. So if we go to the 15-minute, I'm looking for, the big thing is I'm not trying to make things complicated. I'm looking for the simplest sort of stuff now that looks like a nice clean chart today.
Yep.
There's a great example. They went up and put a peak formation in at the quarter level. They engulfed it.
You got the
in
bearish
Asia.
outside reversal.
Yep.
Yeah.
So they've come back down inside and gone sideways into the gap, and then right into the session open, they've gone down 25 pips. So coming back to taking profits, there's an example of where, like with the Aussie New Zealand, I wouldn't have any illusions. 20, 25 pips, I'd be happy to take that and be done, because I know that pair probably isn't going to go, it might go 50, but I doubt it. It's gone into the previous day's low, pulled back and hit the low again. I'd probably be out of that.
Yeah.
Just be happy to take that trade.
And Trapper writes a really great question. How are you supposed to react when you win or lose? So let's say you take your 25 pips. That's just the system, right? That's just you don't feel any emotion. It's just the next 10,000 trades, right? It's just
pretty much.
How do you extrapolate that win from your mind?
I try to. There's some days where literally I can be done in the first 30 minutes before the equity market opens, and I train myself. Like some days it's a good day to trade, but I've also sort of gotten to the point where I know that I get a good trade if I have a goal to get 50 pips a day or whatever that is, or have a good trade. I'll often just walk and shut it down, because I know that the longer you sit there, you can get yourself into something you didn't think you would, and you just undid everything you just did, plus you did more damage. So win or lose isn't so much the issue. Again, I try to approach it that where do I want to be at the end of the day, and end of the week, end of the session. I don't ever want to finish, like have a great day and then destroy it in one moment of stupidity. So it's so much, not so much about, am I elated or depressed? I want to know, am I doing the right thing?
Yeah.
Am I in control of myself? Am I trading or am I gambling? And sometimes you have to stop yourself and say, look, you're gambling. What are you doing? Like looking at some of these charts. So like this is an example of, you can trade this, but this is a low probability type day. And if you're sitting there waiting to try and get in or chase, or get something because you want to trade, that's when you have to stop yourself and say, like, is this one of my best trade setups? Well, no, but there's going to be days where maybe they give you a great trade setup like this, and it's going to go for 25 or 50 pips, and it's set up ideally. They've engineered a nice clean pattern. They've moved the market 50 pips apart. It's clean. That's a better setup. So
what indicators are you using on the blue lines there? Is that like a prior
That's just
high?
Previous day's low, day's low and high. Yeah.
Wicked. Okay. And just quickly, I just want to finish off on Bitcoin. As I say, the big defense of those lows. If you can start on the daily, just to conceptualize what I'm saying there.
So I mentioned this in today's video. We had a nice pin put in place, which, again, a lot of times people see a pin and they automatically want to take the pin as an entry. This is potentially establishing a low, but we can still see that we can take 2-3 weeks to get down there. And there's the 1, 2, 3 that I was talking about. The 3 days down, they pin down into the low. So now we've got a high of the month in place. Sorry. Get my lines to work. We've got a high of the month in place, and they come up and they hit the high, they engulf it, and they come back down and hit the low of the month as well as the low of last month, and that's 3 pushes down. So I think we could still see another little smaller leg down, which again, we could have a middle structure now in place setting up today. So people again might get into the market there. That could be our first mouse getting in long. It's Wednesday. Still got 2 more days to trade this week, and these guys trade on the weekends.
Yep.
Sorry. So
no rest in the crypto world, right?
That's right. So, but now we have, similar to what we saw in the pound on the 15-minute chart, we possibly could have a lower pattern within a pattern setting up. So we've got this lower geometry. People they're shorting the market down lower. If we get this middle structure. It doesn't have to be today. It could be Friday. It could come Friday, Monday could come down, and Tuesday could be the beginning of a move back, or again the beginning of the month. But we're definitely now possibly working the low for a reversal. So the lower highs, again, are going to be trapping lower level shorts, and then that could be setting up for maybe a nice little short squeeze somewhere in there. On the 15-minute, we saw a peak formation last night put in. So Monday, Tuesday, and the third day has broken the highs of Tuesday, and we're sitting on top of that sideways. Now, the other scenario here is that this actually fails and rolls over and retests the low, or it comes back inside, and that again is our middle structure setting up on that daily chart. But again, until this would set up, like if this sets up ideally, this could be an explosive move back up,
right,
to retest the highs of the month, or it fails and we get another leg down. Which again, timing wise, as we head into the new month, could be when that starts.
So make or break time, really, for the crypto.
Yeah, absolutely. I don't know. I mean, you can tell by this chart. People think that it's different. Chris, you've heard this expression. It's different this time. But you can tell by how well structured this chart is that there's big players in this market. There's other people on the other side of that chart working this order flow, and that's really cleanly defined. They've set up a high and a low yesterday. They've hit the stops at the low of the month. They've extended that down a little inside bar right after the equity market opens, and then boom, the explosive move back up. Yeah. 3 pushes down into the open of Asia. Boom, another leg up. So there's big players in this space. Obviously, they have futures contracts being traded and everything else. So the big boys are definitely involved in trading this. And I think people who go in the market, the general public, are long, right? They're long. They're not shorting the market. They're just buying Bitcoin. So when you look at the daily, all the euphoria, 1 push, 2 push, 3 pushes, again, takes out the high of the month. And then boom, they drop it back inside. Last month, works back up into the high. We've got that lower structure. So they broke the lows from the previous month. First sign of weakness. Then it works back up and rolls over. So the public's all long. Well, they're up here. We got lots of volume caught up here buying because of the frenzy. It's going to $500,000.
Yeah, cool.
The big boys come along and wipe this out.
Yep. Okay. Interesting. I've got a couple of questions and we'll wrap it up. Just getting to the end of the hour. Martin writes, hi, Stacey. You often mention the gap. Is that taking into account your 12 candle window at the beginning of the session?
So the gap time to me is, if we go back I will only look at the gap time if they are on their way back if they're going back for a move to the high or to the low, or they're at the high or low of the week. So as I mentioned earlier, see, if you're trading in here, you're caught in junk. So there's an example yesterday where in the gap, the 12 candle window is the high probability time. So what that means is that when the equity markets open, typically they will, in many cases, especially in the US, take you in the wrong direction. So you'll notice last night, the equity market opens and they take you back down to the low on the second leg. And then boom, they move the market back up. So the market opens and they get people chasing the move back down with the trend. If I had indicators on here, all the EMAs would be down probably, or you know. But the gap time, so coming back to some simple things, London is inside still. We're inside of Monday's high and low. They come back down in the gap time. The stop hunts will often occur in the gap time. So sometimes there are some good setups. There's a 50 pip move last night, and in the gap time, they put the peak formation in. So if I'm not at the screen, think of yourself like this. New York, they're waking up. They're not even at the charts yet. They come to the screen. They've already locked in the high. So I'm coming into the session. This bullpen is ideal. That's your 1 bar stop right there, heading into the session. Half an hour later, you just made 50 pips because they're going back down to get the guy who's long at the bottom of London. So somebody's gone long at the in the London session. He's in the money, but they locked in the high in the gap time. So what I'm getting at is that you don't have to sit there all day long. You can come to the screen at certain times, and we talked about the first bar entry. That is a great example. Now, again, on the smaller time frames, there might have been something even better, but it doesn't matter. There's an example of 50 pips and you're done. You're not sitting in this crap where you're trying to, I want 50 pips and you're sitting here for 4 hours and now you're maybe at break even and you can't go to break even because you'll get stopped out. So this is coiling. There's going to be a big move, whether it's today, tomorrow, Friday, there's going to be a big move because we've had 3 days of consolidation.
Yep, I'll bring it on. Everyone likes a bit of movement, don't they, at the end of the day?
Absolutely.
So, yeah, that's what we live for as traders, is a bit of volatility. And there's been a bit of lacking. That's why Bitcoin's been the poster child of movement. Look, I'm gonna wrap it up, Stacey. I know there's a lot of questions still to come. Look, if anyone wants to get in touch with Stacey, what's the best way, Stacey? Just go to the Twitter or reach out to you on the email or
email is pretty good. I got to apologize. I've just received a ton of emails, so I'm not the best getting back right away. I'm getting 50, 60 emails every couple of days, so I apologize if I'm not getting back right away. But yeah, send me an email. Yeah. Yeah, pretty simple.
Well, look, it's great. I mean, look, you've got this really, I mean, it's a sort of a confluence of price action through candlesticks, engulfing patterns, pin bars, various kind of candlesticks. So if people are looking for an understanding of price action, is always a great place to start. But you're combining this technique of behaviors that's going through market structure with the stops and what's going on with the sell side and the flow desks and the prop traders, and then you're combining this great risk management system of risking, say, 15 to make 50, and a very disciplined approach. So it's all encapsulated. It seems on the face of it something that people need to look into in a bit more depth. Obviously, you're not going to get it straight away. So you can really go to town on your website and your YouTube channel to understand a lot more about this going forward. So I want to say thank you to Stacey. For everyone else out there, obviously, if you've enjoyed it, do hit the like button. For tomorrow, we've got I'm speaking tomorrow. You can see the timetable there, but I'll be speaking to Thomas Atkinson from FX Evolution. We'll be talking GameStop and the meme stocks. We're also talking about the crypto scene. For any of you crypto traders out there, we're going to go across the different coins. Very different style of trading from Stacey's, and there's also a number of other people as well that will be looking at me as a fantastic trader. We'll be talking about the Bank of England. So do tune in for that. It's going to be absolutely fascinating viewing to see their different trading styles. They're all very unique, and some of them will resonate with you and some of them more so. So thanks again, Stacey. And thanks all the questions. And I want to give a massive shout out to Master 34. I haven't really been seeing what's been going on, but apparently he's been incredibly active in answering a lot of questions. So massive shout out there to Master 34 for being really active in the channel, and for everyone's questions as well. So from everyone here at Pepperstone and from Stacey, thanks for joining us tonight.
Thanks again, Chris, and thanks to Pepperstone. I appreciate being here. Thank you.
Cheers.